Hi everyone, welcome to another video of our TA video series. So I got too excited for that last video that I showed, so I had to do it back to back. Alright, so this is being filmed directly after the previous one. Okay, so in that previous one we had talked about the failure swing. I didn't even erase anything, I kept it there. So we went over this and we went over how previous support becomes resistance and previous resistance becomes support. And basically what I did is I took you through an example where we were assuming that the secular trend in place was a bull market, okay? It was a bull trend, an upward trend, and we went over that using these charts as an example. But on the flip side of that, what if we did it to where we looked at a bear trend, a bear market? How would we know, or how would we kind of gauge whether or not a breakout towards the upside or a reversal is about to happen, okay? And whether it's not going to happen and we're just, our conclusion or hypothesis is wrong, okay? We do all those things through the price action, okay? So what I did was I drew two more charts over here, and you can see that these are in kind of like a bear market. Their prices are moving lower, and they have been for some time, as seen through how I drew the price action on the coming off of the y-axis here. Okay, so let's first start with this one. Just as with these charts, we can draw a line, a horizontal line, okay, on these charts. And where do we draw that? We drew that on as a line of resistance above peak B. And here we have trough A and trough C. Okay, so if we're looking at a chart, and this is what it looks like so far, there are two things that can happen here. Well, actually, there are kind of like three things, okay? The first thing is that the charts can kind of validate our positivity and our optimism, and the price can move past this line, right, towards the upside. And remember, how do we gauge the validity and the legitimacy of that breakout is through volume. So we also have to take a look at volume to see what kind of volume did that breakout happen or occur on, okay? Okay, so that's one thing that can happen. Another thing that can happen would be that prices, let's say we were too optimistic and just for whatever reason, prices didn't break out past that line and they just continue to move lower. This is also possible as well, okay? But, well, I won't say that. I was going to say more often than not, that won't happen. But because I'm getting ahead of myself, because I'm starting to get excited about talking about reversal signals. And actually, both of these examples, I've already drawn a reversal signal. So I'm getting excited. I'm getting ahead of myself. So let me just calm down. Okay, so one thing that can happen is that prices can break above that resistance, in which case that resistance would become new support in the future here. So with the price actions, and that also would corroborate our bullish optimism and sentiment, is if prices broke out past this line and they move further up, eventually the price action would have to test. Okay, would have to test this line. Means it'd have to touch it and find support on that line before moving even higher. Okay, so in the future, this line of resistance will become support. Okay, that's the first thing that happens towards the upside. Downside is maybe we got it wrong, and in worst case scenario, prices move lower. Okay. Now the third thing that can happen is what I've drawn here, represented in this chart. We have the same exact chart, right, so as we do here. But here, what do we have? We have the presence of troughs A and C, peak B and peak D, and we also have an additional trough E. So what's happened here? Okay, this might be something that happens if the volume isn't necessarily strong on this breakout here. If it still breaks out past that, and the volume's not really that strong, but it's positive volume toward the upside, okay? Generally, what can happen is something like this example we have here. The price action will break through this line of resistance here, right, to form peak D. This in and of itself is a good thing because this peak D is higher than peak B, which is also a positive sign. But we have to look further than that. We see that if the price action would violate that line of resistance once again and find support at peak E. I'm sorry, trough E. Okay, so it found new support at trough E. After finding support there, it would break out once again at this point to move upward, right? And let's just draw that line past peak D. Now, this is an interesting example because at this point, how do we know how to even analyze this? Like so many crazy things going on. It's like you don't know what's what, right? But the thing here is that if this occurs on strong volume, that's a good sign. But worst case, like I said, what if something else happens? We're not sure. Well, we would have to see before this move would take place, this would count as, we give more legitimacy to this line, this breakout past that line, the second breakout past the line of resistance, if that line of the price action, if the price action surpassed this new line of resistance we have here. So here we have a new line of resistance. And with this, and I kept talking about resistance and support, and I just realized after I shot the first video that I said this line here was a line of resistance here. And I said, and I used the theory that previous resistance becomes support and previous support becomes resistance. But here, this became resistance, but it was also resistance here. So you might say, okay, well, we kind of knew that would happen because it found resistance here. But when this happens, what you generally do is, when you're looking forward, you want to use the most recent point of resistance and point of support to kind of give you a general direction as to what the price action is about to do. So you use the most recent information, okay? And this is especially true when you're looking at shorter term. So we're assuming that this chart is basically pretty short term. This might be like a week, okay? 2 weeks at the most, right? But when you're doing that, you want to look at the most recent support and the most recent resistance to kind of gauge your hypothesis of what direction you think the price action is going to move in. So that's why we use this, we drew this line of support over peak D. And that's why we say if this line breaks out here at this point, and let's say the volume is not that strong here, it's not particularly strong like it was in this example, which would cause us to be more cautious. We'd have to then draw a line on peak D to see if the price action violated or would break out past that resistance line. And then this would be a buy signal. Because really, some investors would consider this a buy signal right here. Oh, it violated that line that we drew here above peak B. So this is a buy signal. But what happens is it kind of got whipsawed a little bit because prices moved down again. Like, oh my God, it moved right back down past that line of resistance that I drew. What am I going to do? So just wait here and see here where it's going to stop here and if it's going to bounce back. If it bounces back and it breaks through there on not necessarily, like I said, strong volume, but it breaks out anyway, then the next thing we would do is see if prices move past this other line of resistance we drew at peak D. One thing that can also happen, if you want to be super pessimistic, is that this never actually happened and that prices move down here, like this. Then how much, then the question becomes, okay, so if that happens, how much significance should we get to that down to? Again, everything is relative to previous support and previous resistance. So, but in all honesty, if this happened, personally, I'd get out of it, okay? But just for the sake of argument, we say the prices found resistance again here at this line as they previously found resistance here, okay? So it's not out of the question totally, but how much significance should we give to that? Well, then we have to look at the horizontal lines that we can draw here. And let me be honest right here, these aren't exactly even. This one is lower than this one. But we'll just say, if we were to use the most recent one, like I said here, we see if the prices would break past the line that we drew on the support of trough C. And if prices move down lower past that, then that is an indication that, oh boy, we really need to get out of this trade right now. Okay. So that's how we put into practice. We apply the knowledge of previous support becomes resistance and previous resistance becomes support, and how we kind of used it and applied it to kind of signals that would be a precursor to a reversal signal or reversal in trend in any given stock chart. Okay, so that's that video. I hope it was clear for you. I got a little bit excited because, like I said, this stuff for me is like really exciting to kind of put what you learn into practice and to be able to analyze something. That's kind of my joint. So hopefully everybody understood. Okay, and until next time, I'll see you.